some good news for NSE investors, particularly if you're into stocks, you're into ETFs, because there's going to be a new ETF that is going to be listed on 16th July 2025. So that's next week. You better watch out. This ETF is a global equity ETF, and it's going to be listed by this South African company that is known as Satrix. Why it's important is because you are going to have access to investing in companies like Microsoft, Apple, Nvidia, Alphabet, Amazon, and the likes. But now it's an ETF. An ETF is like a basket. Think of it like a basket. So I have this basket, and in this basket, there are 2 oranges, there are 3 pears, there are 6 avocados, there are 10 passion fruits. I like passion fruits. So you have the option of buying the whole basket at one price that I have set out. So for this basket, I can say it goes for, let's say, 500 shillings for you to buy this basket. You, as an investor, you don't have the option of selecting 3 passion fruits out of the 10 passion fruits that are in this basket. You have to buy the whole basket the way I have organized it. An ETF can be a stock ETF, an equity ETF, like in this case, it's for stocks. It can be for gold. We have another ETF in the market, so this is not the only ETF that is going to be listed there. The only ETF that we have so far is ABSA New Gold ETF. It's backed by gold, and you can see it's expensive. It's going for 3,900 shillings. That is as at July 9th. So the price plays around 4,000 shillings, 3,900 shillings. The good thing is that this ETF is going to be stock-based, equity-based, unlike the ABSA one that is pegged on gold. So here are a few things that you need to know about this ETF so that you can see whether it's worth investing there. I want you to understand how money is made through ETFs. You make money through capital gain, the same way like a stock operates. That you can buy an ETF if it's going for, let's say, 500 shillings, like that basket of mine is going for 500 shillings. Then you get to sell it to somebody who is willing to buy it at 700 shillings. So 700 shillings minus 500 shillings, that's 200 shillings. That's how you make money, through capital gain. The value of that basket, the value of that ETF has gone up, so you make money by exchanging it. By the way, an ETF is an exchange traded fund, so it works just like a stock. The other way that you can make money is through dividends, but this particular one is not going to pay out dividends. So the only source of money, source of income that you're going to make from this ETF is through selling the ETF and making a gain. Holding on, waiting until the value has gone up, and then finding a buyer. Now, let's look at Satrix, this company that is going to list this ETF in the Nairobi Securities Exchange Market. One is that it's going to be listed in Kenyan Shillings, so you don't have to worry about converting your Kenyan Shillings to USD, then back to Kenyan Shillings once you make the gain. It's in Kenyan Shillings, so it's going to be available and accessible to you and me and to anyone else. 2 is that this company, like I said, it's a South African company, has already listed this ETF in the South African market. So it's now coming to the Kenyan market. The other thing that you need to know is that what is the value of this ETF? You see, the way we say Safaricom shares have hit the 2 trillion mark. It's the same thing. Now for Satrix, the ETF value is around 18.2 billion rand. So that's around 1.1 billion USD. The other thing that you need to know is that this specific ETF is backed by a global investment firm that is known as BlackRock. So those are the main investors. Now this company, Satrix Limited, is backing this ETF to this company that is a global investment firm. Go check them out. It's a big company, BlackRock. The other thing that you need to know is that the benchmark of this ETF is going to replicate the MSCI World Index. It's an index that tracks the large and mid-sized companies that are from 23 developed countries like US, UK, Japan. This is particularly important because if you're going to invest in an ETF that has these companies from 23 developed countries, you can see that you're going to have access to this market in the Kenyan market. In total, they manage around 240 billion rands. So that's around 13.4 billion USD. That is that company alone and not this specific ETF. For this specific ETF, it's 1.1 billion, the one that is coming to the Kenyan market. And the market share of this company is that it contributes 38% in the South African ETFs. So this is a big company. This is a big company that has a shareholding in South Africa. And they've also ventured to Namibia, and now they're coming to Kenya, and they're planning to go to African, exchange markets and see what's up, because, Africa as a continent, we have to grow. We have to have access to these international markets. The reason why I'm showing you all this is so that you can get to understand what you need to know before you invest. You need to go and see what Satrix, what this company Satrix does. You need to have a feel of what they manage, what their past performance is like, because as an investor, you need to understand how the company that you're going to invest in looks like, so that we don't say this is, wash company. You've seen that this is a huge company that manages these assets. I was reading an article where one of the directors was talking about why they decided to choose Nairobi, why they chose Kenya to be their next investment destination. And it's because there are a lot of similarities between South Africa and Kenya, in that in South Africa, the dominant investment industry is in mutual funds and unit trusts, just like Kenya. By mutual funds, we're talking about money market funds, fixed income funds, which is a common thing in South Africa. And what they noticed is that these are two common markets that behave in a similar way. The fact that they introduced ETFs in the South African market and it's been embraced can also be adopted in the South African market. So those are some of the things that investors look at before they decide to say, we are going to invest in, let's say, Tanzania. We are going to put up our business in Uganda. Now, what are the risks and benefits of investing in an ETF, specifically this one? Let me start with the risks. One is that investing in an ETF is risky. It's just like investing in a stock. You're going to buy an ETF, let's say if it's going for 200 shillings, right? The only way you can make money specifically from this ETF, since they're not going to be paying out dividends, is by selling your ETF. So let's say that you bought it at 200 shillings. I don't know what the price is, but I'm just giving you an example. Let's say that the ETF would go for, let's say, 200 shillings. Ivy has bought an ETF that was going for 200 shillings. We are trading in the market and somebody else is willing to buy it at 300 shillings. Ivy has made a gain of 300 shillings minus 200 shillings, that's 100 shillings. Let's say that the value of this ETF keeps going up to, let's say, 700 shillings. Then somebody buys that ETF from Ivy, or somebody else buys that ETF at 700 shillings. Then let's say there's a disruption in the industry and the value of that ETF starts going down. Nobody wants to buy it, just like in the stock exchange market. So that person who bought that stock at 700 shillings is now going to sell it at, let's say, 600 shillings. So you've incurred a loss because you don't want to hold it anymore, right? So that's how you make money. It's risky, just like a stock, because the value of this ETF can go up and can go down. Specifically for this ETF, because they're not going to be paying out dividends. You see, that's what we do with these other stocks, that in as much as the value has gone down, at least you're going to get a dividend payout if you still own that stock. If you sell it at a loss, I don't see any other compensation that you can get. But the benefit to that, you have access to diversification. Like you see, for a stock, it's just a stock. If something happens in the market and the value of that stock goes down, that's it. There's nothing that you can do. But at least now it's a basket where we have different companies. We have Apple, we have Microsoft, we have Amazon. So there's a little bit of here, a little bit of here. If anything happens here, at least the shock can be absorbed here. So that diversification element that it has over stocks, you buying individual stocks, is what makes it attractive. One of the concerns that investors have here in Kenya, even just a typical small investor like me here in Kenya, is that we say that the NSE market is not robust. We just have a few stocks that do well. Just go for the banking stocks, go for some agricultural stocks. Like, it's not a robust industry where we have so many stocks that are being listed and you have the option of going here, going here. Now, that's the benefit of this ETF, that we are now going to have access to international markets, especially for people who are skeptical about investing in Kenyan companies that are listed in the NSE. This is your opportunity to go abroad while still in Kenya. The other benefit that I have noticed specifically with this ETF is that, remember when I told you that this company, that is Satrix, they are backed or they are linked to BlackRock. BlackRock is the world's largest asset manager, and it's currently managing around 11.5 trillion. 11.5 trillion US dollars in assets. So we are safe, sort of safe. Of course, we can't control what happens in the global economy, like the shocks that can be there, anything that can affect the performance of these stocks. But the fact that the company that is listing this ETF is backed by another company that is into this investment can give us a go ahead to somehow trust, if trust is the issue that you have with ETFs, to invest your money here. If you are a risk taker, are you going to put your money in this ETF? I'd love to know your thoughts in the comments.